Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So gold actually currently is becoming one of the most attractive markets as it shows really strong action. It is, well, has the real signs of the thrusting compared to the Forex market. And we think that gold has really good background, fundamental background to keep going higher in a long-term perspective. So based on our long-term analysis, as we have said, at the end of the 2022, somewhere in autumn, we said that 1650 area seems well attractive for a long-term position taking, and we think that gold should show the reversal, and we are happy that really has happened. So we do not see now the reasons to change this. We think that gold, even the action that we see currently, it's not just some pullback on a monthly chart or something of that sort, but it might be, and we think that it is starting of the new long-term extension on the gold market. There are lots of reasons for that. Some of them we're trying to explain in today's weekly report that we have prepared. So we dig a bit the topic of the CPI numbers that we have actually explained in the Forex report, but this time we're just didn't talk about the numbers itself, but why we suggest that investors are a bit mispricing this possibility. And as you can see, that's really big, well-known analysis. Such companies as Fidelity or BlackRock, some others also suggest that market is wrong in assessment of the current level and in the Fed policy, which actually we also think. Also, we're trying to dig a bit the reasons for the gold rally right now, and we have found a lot of reasons for that. As you could see in reports, not only the economical, but some political, geopolitical moments also exist for that. So what we could do in the current circumstances? Well, guys, those of you who are investing in the gold probably should feel well, since you have started buying the gold somewhere around 17 even probably area. Usually investing is a long-term and constant process. So you're not just buying the gold around lows and just hold them for years. You're adding to your position every time when you believe that gold still stands on the road of the rally, and when you see more or less significant retracement. So for a long-term investment, I would say that maybe it makes sense to wait a bit and do not buy right now. Just because around 1945, 1950, we see the strong resistance area, which mostly comes from the overbought levels on the monthly and weekly chart. In general, we could say that gold has really good placement positions just because it has broken all major fib levels on the way to the all-time high. But the only barrier that we have the overbought, it means that, first of all, it hardly will hurt the overall sentiment and overall tendency. But at the same time, which is a really pleasant moment for those who would like to scale in the position or would like just to take new position, it could trigger moderate pullback, which we suggest makes sense to wait if you would like to invest in the long term in gold. So we actually do not exclude that market really could show the pullback somewhere to the 1840 area. It will not be some problems when it will reach the 1945, 1950. So those of you who are just trading the gold and keeping a long position, you should think what you're going to do when the market will hit the 1950. Maybe you're tight stop. Maybe you will just get the profit there and will trying to catch the pullback. But you have to recognize 1945, 1950 level, which will be resistance, and be prepared that some reaction market could show. At the best case, it will be just sideways action, some stagnation or something of that sort. But it might be also the moderate pullback. It also could happen. For a shorter term trading, we do not have any clear patterns. It means that if you would like to trade gold right now on the daily and intraday charts, when you use the daily chart as a trend direction and you use the intraday charts for position taking, you do not have any patterns, you have only the trend direction. You see that trend is bullish and it will remain bullish until approximately 1850 area, which is also very close to the daily result. So we do not interest below these levels, instead below. For daily trading we have this level and only intraday levels that stands at this range. So in fact our working range for daily intraday trading stands above 1850 area, right there. Our target is 1945, 1950, and the question where we will take the long position for trading this process. So obviously bears should do nothing, just sit on their hands because nothing to do. There are only two ways of trading such as situations. When you do not have the patterns, you have only trend direction. The first ability is to trying to wait for some minor patterns on the lower time frame. For example, on the hourly chart, I do not know, maybe it will be just an example. It doesn't mean that it definitely will happen, but if you would calculate the extension, you see that it's 1618. You could wait, for example, some head and shoulders. Once it will be formed, you're calculating some kind of the ABCD that it will point you the level where you could take the position and so on. So it not necessarily will be the head and shoulders. Maybe it will be, not know, garter steeple to buy. For instance, market starts forming the ABCD here, somewhere 19 even, where you will get garter steeple to buy and take the position in the upper continuation. That's the first approach. But currently, as you can see, we do not have any patterns. Second is using the Jordan-Napoli tactics, which calls as a minesweeper for trading. So for that purpose, you need to wait when the market starts to pull back and watch for the levels. So here is the hourly levels, but you also could consider levels on the 4-hour time frame chart above this area. As we said, we're considering only levels above 1850. So it means that it will be 1885 approximately and 1865 on average the conference support. That's two levels that you can consider on here, but maybe you could also keep an eye on these two levels that stands very close. And then tactics suggest that market should drop to some strong support. Hourly trend will turn bearish. We know that the trend remains bullish on the daily chart, at least at the 1845 area. So it means that all of these levels that we have here and here are suitable for taking the long position. And you need to wait when the market, after it touches the level, turns in a previous direction, it means up, and the hourly trend will also turn back in a bullish direction. In this case, you could try and take a position on some retracement, minor retracement here, and you will be possessed for an upward direction. That's called minesweeper. So this example you could see right there. So here is the upward trend, market drops. Here even you can see that MACD hasn't turned bearish. And you just market reestablish upward direction, trend turns bullish, and you can take a position some minor retracement. So that's in general how it works. It's not very simple, but unfortunately currently as we do not have any patterns, well, we can't get any other tools for trading. Maybe if you're using some different styles, for instance the Elliott waves, maybe some DeMark tools for trading in the sequence of DeMark or something of that sort, you could also use it in the current circumstances. That's all that we have on the gold. Currently, the two major things that nearest target is 1945, 1950. That could trigger solid pullback. And if you would like to take the long position for more or less long-term position taking, it makes sense to wait and see what will happen. Until market will not reach the 1945, 1950, this is relatively safe to consider taking the intraday bullish positions, because market has no real barriers, except maybe some data releases or something of that sort. Technically, it has no barriers, no overbought, no fib levels, stands relatively in free space, so it will be more or less easy to keep moving with the impulse, with the momentum that market right now has. So that's just in two words what we have.